Don't say it, Michael. All right, so the third component is definitely fundamentals. And because they're all in here, I can use them in different ways to filter through that. And then watch lists. Let's go back to the watch list for example. I can build, I think, a DVY right here. There's DVY, and there's the holdings. There's 99 stocks inside of DVY. DVY is the ETF that holds all the highest paying dividend stocks. And so there's 99 of them, and I can filter through those the same way. So I can look at fundamentals. I'm using dividends just because it's an easy fundamental to talk about. I can do price-earnings ratio. I can do PEG ratio, price-earnings to growth. I can do all of these. Michael teaches me how to do them all. Because trust me, me and a computer, it took me 30 minutes to get this to come up on the screen. But the key to me is simple. Simple enough that I can trade it, and I can get in it, and I can get out of it. You know, I owned Cisco yesterday. I didn't get any because I accumulated Cisco over the years, and I had about 10,000 shares of Cisco going into earnings yesterday, and Cisco before yesterday was up about 20% year to date. And I figure I am up 20% in Cisco. It's been a good year. They have a little thing called insurance that I probably should invest a little bit of money in. So for 38 cents per option, I could buy 10,000 put options on Cisco. Did it work? Yep. Yes, and I was so glad that I spent the 35, what ended up being 38 cents with commission on the Cisco puts. And you know what I said all day yesterday, or the day before yesterday? I said all day, you know, that's just a waste of money. Cisco never does anything wrong. John Chambers would have warned us, because he is probably one of the best at doing that. But I don't think John Chambers knew. I think by listening to his press conference yesterday, he was more shocked by it than the announcement itself. And you want to know why the market's trading down today? Because John Chambers 3 times yesterday in 3 different press conferences defended his comments that the public is not buying. And who he's talking about in the public is who? The government entities. They are the largest purchasers of computer software, hardware, and they aren't buying. He said their sales were down 20% in the public sector alone. What does that tell you? Government, this is the first time, I wrote on my blog last night, this is the first time I've been proud of government. They didn't spend as much last month. Why? They don't have it. Have you looked at the jobs reports lately? What's going on in the jobs report? We're laying off government employees. That has to be the first time in 20 years. No Tea Party members here. We're laying them off. Not Man, it's a tough crowd, let me tell you. But look at the numbers. The private sector jobs are growing for the first time in God knows when. Private sector is growing. Private sector is growing in the sense that they're consuming more. And why am I going through this? Because I have other scans in here that's starting to look at what's going to happen as jobs pick up. I think that this rollover, this consolidation is temporary. The November jobs numbers are going to be better than the October job numbers. And if they are, what's going to happen? Sentiment's going to start to swing again. How far are we away from getting those job numbers? We're only 2.5 weeks away. We're not far enough away for this really to get too far out of control. Am I right? I don't know. I'll let you know. Am I wrong? I'll let you know. I'll tell you what I do every day is I look at what I believe in. And I scan it every day. And that's all this is. That's what all of this is all about. So you can look at the market technically, fundamentally, and with ideas. And then tie them all together. And when you tie them all together, now you have a strategy for managing your money. That's where, when you look at, if you have a strategy, you can define how to scan the market, right? You can define what part of the market you want to scan. I have probably 1,500 different watch lists on my system at home that I categorize them by what watch list they're in. Are they sentiment watch lists? Are they uptrend watch lists? Are they downtrend watch lists? Are they topping watch lists? Are they bottoming watch lists? I do it by technical, fundamental, and ideas. And I scan those ideas because I don't want to fight the trend. If you fight the trend, what happens to you? Have you ever seen a wood chipper? You know those things they use on the side of the road when they cut branches out of a tree and they throw them in? That's you. If you fight the trend, you're coming out the other side in pieces. And it ain't pretty. See, don't fight it because it won't work. I don't care if you're a contrarian, but be a contrarian this way. Let's go back and look at the NASDAQ here. Michael, just throw something when I need to shut up. Let's look at the NASDAQ, and this is the NASDAQ index. Look what's happening here. We've come back below the April high. We're at 25.16 right now, and we're down 1.52% on the day. But look at this beautiful, whatever you want to call that. I call that just, here you want to see how this is how much I've traded the market. I traded the market off of this bottom. I sold out of the market off of this top. I shorted when it confirmed. I covered, and I've been waiting. I've made 2 essential trades, and then I went long this one, obviously. So we've made 3 trades for the year. Now, obviously, there's more than 3 individual trades, but I've traded in 3 periods. Why do I want to trade this? Some of you have lost your hair. I think you've been trading this. But the good news for you, this is the good news. My grandfather told me this a long time ago, that God does not put marble tops on cheap furniture. So, I think and I've never forgotten that as long as I live. The second thing that my grandfather told me that is very applicable to investing is that trees never grow on the top of the mountain. They only grow in the valley. When the market's at a top, why are we buying? I've never understood that. I heard a comment the other day that an announcer, I wanted to call the guy and thank him. He said, there are more people now trying to catch the next 2 to 3% of this run, which will be the end of it, than we're trying to catch the first 2 to 3% off of the bottom, 10 to 1. Does that make sense to you? Any day of the week, those bottoms have less risk than buying those tops, do they not? We all know that, don't we? What happens when we get over here on our computer and we're running our scans and we're doing all of our work? What do? We forget about common sense. And we think about beating the market. And that's why I started with, you can't beat it, you can only manage it. Scans, build lists, strategy, technical, fundamental, 2 things that you can use. Quant, if you know how to build quant strategies, which is what some of you are doing by building these scans, you're actually building a quant strategy, you're building a black box. How many of you know who Martin Pring is? How many of you have ever slept through one of Martin's classes? Lovely guy, very intelligent, extremely intelligent. He wrote a book. I bought the book instead of going to the class. It's called Breaking the Black Box. He wrote it some 12, 13 years ago. If you do scanning, quant strategies of any kind, read the book. And the reason I say read the book is because the title of the book, Breaking the Black Box, is about how black boxes get broken and why they break. And that's what you have to understand. I have nothing against quant strategy scanning or any of that, but understand it will break. It's just a matter of when. All strategies work for a time, and then they break. Why do you think I keep all these watch lists? Because they cycle back around. Eventually, they come back into favor, and I want those watch lists so that I can use them. And then The last thing, and I don't have time to get into this at all, which is discipline, 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 discipline. You have to become a disciplined trader. If you are not disciplined, stop now. Become disciplined. Learn entry, exit, target. How do I get in? How do I get out? Where am I going? Learn how to define stops, which are your exit points. Those are three key things that you have to know. What's the goal? Why are you doing this? If the goal isn't big enough, the why doesn't matter. In other words, if you don't have a reasonable, rational functionality behind this, it doesn't matter. He who dies with the most marbles still dies. Why do you think Bill Gates and Andrew Carnegie and Warren Buffett and all of these people who have billions of dollars are trying to give it away? It's not about the money. It's about the lifestyle. See, and that's the key to all of this. And then the last thing I want to say is this, is that you have to define yourself. Are you a trend follower? Are you a trend setter? Or are you a trend fighter? All three can win, but all three have to be disciplined. But trends are what we all trade off of, whether we admit it or not. We all trade off the trends. And then here's the last thing I'm going to leave you with, is that my goal every day is to have a consistent, renewable, investable strategy. Consistent, renewable, investable strategy. If it's not investable, it doesn't matter what it is. Be consistent with it, make sure it's renewable, and make sure that you can actually do it. Because otherwise, it isn't any good. Now, we do have two websites Michael mentioned, Sector Exchange and ETFexchange.com. That's our web page. You can actually open it inside of Stockfinder and follow along with us every day. My notes are published every morning. This is what I wrote this morning, which is money management equals risk management. And what am I talking about? The topping formations of the market. And that you've got to be careful in this market. You've got to adjust your stops and adjust to what you're doing. They're archived on the website every day so that you can always go back and look at them. You can look at those. They're free. And then freestockcharts.com. Michael might have to help me out, but you can sign. We are on Free Stock Charts. We do publish on Free Stock Charts all the time, but you have to be a friend on Free Stock Charts of us in order to get our publications. We produce at least one video a week. We produce a lot of material that we put up there on ETFs and different scanning ideas. We share a lot of stuff on Free Stock Charts through the friend thing. So if you want to do that, you just go on to Free Stock Charts and sign up as a friend. On our website, my brother even put a tutorial on there of how to do that, which is right here on the right hand of the website. So you can actually sign up there and do that as well.